Savings and current accounts. This topic is fundamental to our understanding of personal finance. Today, let's break it down in plain and simple terms and see what differentiates them. I'm John. Let's jump right in. What are they? So what exactly are savings and current accounts? Well, to keep it simple, a savings account is like a piggy bank, but digital. You put your money in there to save and in some cases earn a bit of interest. Its primary purpose is to hold money that is not meant for daily transactions. A current account, on the other hand, is like your wallet. You use it for daily expenses like groceries, bills, and of course that irresistible cup of coffee. Individuals, businesses, companies, public enterprises, etc. can access and utilize their funds with minimal to no restrictions on transactions. Interest. Let's talk a bit more about interest now. Savings accounts offer you a little something extra for keeping your money with them. It's like a thank you from the bank. The interest rate might not make you a millionaire overnight, as it's usually quite small, but it adds up over time. Current accounts, well, they don't usually give you any interest. They're more about convenience than growing your money. Access. Accessibility is key. With a savings account, your money is a bit harder to get to. As we remember, these accounts are not designed for daily spending, hence they might have monthly limits on the number of transactions you can make without incurring a fee. Current accounts are super accessible. They offer multiple avenues such as a debit card, checks, and mobile apps, ensuring that your money is always just a tap or swipe away. But when it comes to accessibility, you should always keep in mind your overall user experience with the bank or financial institution of your choice. Do they have an easy-to-use app? Are their services working the way they should? Is their customer support helpful and responsive? Do they provide top-notch safety and security? These questions are important to answer, and we actually know where you can find all of these for your daily transactions and long-term savings. Integrated. Over 16 million customers have already upgraded their banking experience by switching to Wise. Wise is an alternative to banks, an institution that provides money services. There you can hold balances in over 40 currencies, get account details for major currencies to accept payments, access funds whenever you need with Wise debit and digital cards, transfer money to over 160 countries, and all your cross-currency transactions will be converted using mid-market exchange rates. This transparency ensures there are no hidden charges. If you want to put your money to work, we've got you covered with Wise Interest and Wise Stocks functionality, allowing you to grow your money while maintaining instant access. To learn more about how the Wise app works, simply tap here. If you're already excited about taking your money management to the next level, sign up for free using the link in the description. Now back to banks. Fees. Alright, here's a heads up. Savings accounts usually have little to no fees. They're all about helping you save, although they might include monthly maintenance fees, which may be waivable if you maintain a minimum balance or have recurring deposits, excess transaction fees. Sometimes savings accounts are not designed for frequent transactions. Exceeding the allowed limit can incur a fee per extra transaction, ATM fees. Depending on your bank and the network, using ATMs to access your savings might come with its own set of fees. Common fees you might encounter with a current account are overdraft fees. If your account slips below zero, this fee kicks in, sometimes with additional daily charges until the balance is positive again. Monthly service fees. Some banks charge simply for managing your account each month, though there are usually ways to sidestep these charges, such as maintaining a minimum daily balance. Transaction fees. In some instances, particularly for business accounts, banks might charge a fee after a certain number of transactions have been exceeded. ATM fees. Especially when using ATMs outside of your bank's network, you might encounter withdrawal fees. Safety. Let's talk safety. Both types of accounts are generally safe because banks are heavily regulated. If you choose a financial institution as an alternative, make sure it's trusted. But here's the deal. Some countries have deposit insurance that guarantees your money up to a certain limit in case the bank goes bankrupt. It's like having a financial safety net. Which one's right for you? So which one should you choose? It really depends on your goals. If you're all about saving for the future and don't need constant access to your funds, a savings account is a solid choice. But if you need an account for daily spending and transactions, a current account is the way to go, and it's perfectly fine to have both. Final thoughts. All right, we've covered the basics of savings and current accounts. Remember, there's no one-size-fits-all answer. It's all about what suits your financial goals. So take your time and make the choice that works best for you. If you found this video helpful, take a look at this one here. We cover more details about Wise multi-currency account features. Thanks for watching, and until next time.